Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to BL State of Economy podcast. I'm Lokeshwarri. We are joined today by Dr. Arun Singh, Global Chief Economist, Dun & Bradstreet. We will be dissecting the extremely disturbing growth and inflation numbers from various parts of the globe. And we'll also try to understand what all this means for India. Hello, Dr. Singh. Welcome to the BL State of Economy podcast. So I'd just like to call your attention to what our RBI Deputy Governor Michael Patra had recently said in a speech, that he said that 2020s can actually be a lost decade because of the pandemic and the war and the slowdown in investments which started in 2010 will actually continue, and then even the next decade could be a washout. So what is your thoughts on this statement? Are we actually facing a lost decade?
There are certain structural challenges ahead for not just India, in fact, to the global economy as a whole. We have, in fact, aging workforce primarily in the developed nation. We have slowing investment. Intent could be there, but the actual investment on the ground is slowing. We have a productivity slowing down. So there are many factors, but these are the critical, which basically add up to your GDP, add up to your growth. In fact, if you look at the global growth, which has been projected for the decade of 2022 to 2030, this is slightly more than the 2%. Whereas if we compare this growth during 2000 to 2010, this growth was close to 3.5%, which is almost double. So the growth itself in this decade, it's down, what we have seen in the 2000 to 2010 growth. That's happening. However, there are several long-term development I think we need to keep in mind, which help me to counter this argument. And there are some supporting that we might have not lost on the decade. There are certain good things happening on the planet. One, if you look at the technological advancement, in fact, this decade are witnessing a rapid acceleration in technological innovation. The way we are talking about Industry 4 and including Industry 4 into the mainstream of economic growth is very high. And that's going to reshape the potential for the various industries. If I have to take example, we all talk about artificial intelligence, blockchain, renewable energy technologies. These all are experiencing a significant growth. These are going to certainly lead what we call economic transformation and job creation. And that's happening, I think. While we worry about AI, but there are other things which basically AI can contribute in terms of the productivity and other things. That's happening. So that's one counter argument. Second is the infrastructure investment. You might have seen, and India is one example, but then other countries, the biggest country we're talking about, the government worldwide are recognizing the need for significant infrastructure investment, which can stimulate economic growth and create a new jobs. That's basically two things we're talking about. In fact, when I talk about US, $2.1 trillion boost for the public infrastructure for the next 10 years, that could add as much as 5.7 trillion to the US over the next decade. And that can create a 2.3 million jobs by 2024. So on infrastructure investment, there's a massive push happening. And in fact, we have seen what's happening in India as well in terms of the infrastructure piece. And that's the second counter thing. And the third thing is that we're talking about the sustainability area. And the current decade will, witness a very global shift toward the sustainability and environmental consciousness. Government and in fact, many businesses are increasingly focusing on renewable energy. We talk about electrical mobility, circular economy practices, which can certainly drive economic growth and, in a way, managing climate change. Other than these factors, when I just talked about these three factors, there are many other things. In fact, the pandemic has led to increased resilience and adaptation among individuals, businesses, and the government, which we're talking about creativity, innovation, development of new business models. We have all seen the digitalization adoption in the country. I mean, we talk about India and some of the other global countries have fast tracked by at least 7 to 10 years. The various research suggests that, and there's people, have shown that one. The threat of aging population in developed countries, when we talk about, can be counterbalanced by encouraging skilled immigration and creating opportunities for everyone. If I have to talk about Japan as an example, in fact, Japan has incentivized firms to hire older workers and promoted a massive increase of female participation in the workforce. So things are happening. This started during the pandemic start or slightly before than that. On a face, it appears that we are losing out, but actually it's not. There are certain factors which might put global growth trajectory into different growth span.
Yeah, that's very heartening to hear that things are not as bleak as they look as of now. So let's start with inflation, because that is the main influencing factor for central bank policies and for growth. Headline inflation is coming down in most regions, but the core inflation is still elevated. So what's your outlook on inflation in the US, EU area, and in Asia for 2023?
It appears that headline inflation has peaked across all regions, whereas core inflation have not yet. I think there's still some months, some quarters where core inflation is likely to remain elevated or go up, at least for some markets, we can see. Out of all three regions you talked about, I think Asia Pacific is probably the best placed, whereas EU is the worst placed. And we all know about that, look like, in terms of the inflation outlook when you talk about. There are a few reasons I want to highlight. First, when we compared with EU or US, Asia Pacific did not see the same degree of price shocks because of the structural trade and economic reasons we have seen in the past. The second, several central banks, such as if you talk about South Korea, New Zealand, in this region, they began tightening monetary policy much before the Fed or the ECBs. So most of the countries in the Asia Pacific can see the monetary tightening was long time back and started long time back. The third region can say that the two largest Asian economies, that's China and Japan, have a very benign inflation outlook. China is just recovering from its delayed reopening, whereas Japan, which had been battling disinflation for decades, now sees some sign of inflation positively. So I think Asia Pacific region is likely to be slightly manageable inflation for 2023, whereas US and EU is going to be a problem for companies or people or the government authority.
Yeah, so we are seeing the central banks are actually waging a war against inflation, right from Fed to ECB to all the other central banks. Why are they so intent on bringing down the inflation towards their long-term targets? What is the motivation? And will they be able to continue this battle against inflation, given that it's beginning to affect growth?
This is the credibility issue of the central bank across market. Central banks are committed to inflation targeting as the primary goal. And if these primary goals are not met, then that erodes their credibility of being monetary authorities, and related policy will also be questions. Central banks have learned from what we call a historical experience that there are no half measures to tackling inflation. If I have to take you back in 1970s and 80s, supply shock from the oil prices had pushed inflation to a record high levels. I think we all have seen that. And back then, central banks prematurely declared victory over inflation. In fact, eventually, the US Fed had to jack up interest rate up to 20% in a shock therapy to deal a death blow to inflation. Since then, inflation targeting has been built into the central bank's institutional frame. So their primary target of a central bank is inflation control. Whether they will be able to continue prioritizing inflation control over growth for long time goes back to perception of credibility and independence. If you look at many people, many critique we have seen, and they argue that many central banks were behind the curve with the transitory inflation narrative during last year. And in my own research, we have found that many countries, many central banks used to say that don't worry about the inflation last year. They used to say that this inflation is transitory in nature, and that was the reason that they did not increase the interest rate last year when it was expected. This is a deterrent to premature softening now. If they do, unless growth or unemployment are specific goals of a monetary or policy or monetary authority, central banks are unlikely to abandon inflation targeting. While the growth is a concern, there's no doubt about it. But in economic theory, economic principle, growth is also target from the government side, what government is doing with the fiscal policy or maybe other measures. So it's growth has to be basically targeted by government, whereas inflation has to be targeted by central bank, because there's no other monetary measure, there's no measures which anyone can do to control inflation, which means I think central bank across market, across country, they will continue to go behind inflation targeting for quite some time.
Yeah, that's an interesting thing you said, that central banks target inflation and governments target growth. We don't really look at it that way. So moving on to growth, let's start with the growth in US itself. So yesterday we had the GDP growth for the first quarter of 2023 that was revised higher to 2% from 1.3% estimated earlier. So does that give us room for optimism? What are your growth outlook for the US market?
So I think growth in the US will certainly suffer given the unprecedented monetary tightening that we have seen, and that has happened over the past year. And we have seen that how Fed rate gone from X to the Y, and that's a very significant push. In fact, data is giving a very mixed signal so far, with private consumption and the labor market supporting the economy, while manufacturing and housing showing a clear sign of weaknesses. And I know that's a good news that it's coming revised upward. But what we may see going forward, at least 1 or 2 quarters of the negative growth, that does not necessarily mean that the economy will be in the recession. Because 1 or 2 quarters of negative growth, that should not be a narrative for the recession for any of the countries. Unfortunately, we have seen in some of those narratives, but that's not the case for the US. We are projecting, in fact, an overall expansion of something close to 1% for the economy in a 2023 as a whole. But the one, I think, concern and one thing we have to keep monitoring and the developments on the banking crisis, which we have seen in what happened in 2008. So it's not just 2022, 2023. It's also about the repercussion from the banking crisis in next quarter or next year. That things I think we need to keep monitoring. But other than that, 1% growth for US economy in 2023, that's what we can see. And that's a good number, given the world is battling with revival phase.
Okay, so moving on to the EU area, you said that the technical recession may happen in US, but that's not a concern. So we recently heard that Germany has slipped into a technical recession, and that whole EU area is looking far more fragile now because of this Russia-Ukraine war. Well, how do you think it will pan out going ahead? I think UK is also looking pretty fragile. What is your prognosis for that area?
So talking about EU first and Germany and UK later, EU has obviously been the worst hit by the war, given its geographical reason, the location, and its historical dependence on Russian energy. The war has exposed EU more than anyone else on the planet. So they've seen that how fragile they are. Europe largely relies more on gas for its energy needs. And I think we have seen the crude oil prices is cooling down, but that's not going to provide much help. In fact, that could be the indirect reply for the EU. Most important is that Europe is now seeing profound changes on its energy flows. it has benefited non-traditional suppliers to Europe, in the Middle East, in the Central Asia, and even in the US, if you talk about. At the same time, there is a stronger push to renewable, which means, there's rapid changes to the policies and sudden jolt to business investment plans. And that's what's happening. In fact, if I have to talk about energy transition, in our view, carries a lot more lurking risk than the day-to-day price movement of energy. In fact, those are just the simple global demand and supply decision by bodies like OPEC and all that. So EU looks more fragile in that, true. And I think energy is going to be a single most factor of a policy making in 2023 and year beyond, because I think we have seen the cost of living in the European market, especially in the cost of electricity and other piece, as they got hit, and that's not going to come down. Germany is a serious concern, likely to create a problem, for quite some time, and going to have a, what I can say, the negative contribution to the overall EU growth in 2023 and year beyond. But I think there are some signs of improvement we can see towards second half. Things might revive, but that's assumption based. For UK, it's very weird things happening now. The core inflation has given a reason to Bank of England to increase the interest rate again, which they had done last time very recently, and now it's the highest in many years. And I think many countries, it's a problem. And this goes back to our conversation earlier. I think Bank of England is focusing more of inflation control rather than worry for the growth, which means if the government and the Bank of England is not working in tandem to control inflation and revive growth, then UK is certainly going to be in a difficult roadmap. But at this point of time, we don't see serious issues like what we have seen in the Germany. And it's all about the assumption base, that how government and the Bank of England come together to manage this one. But whereas if you have to look at the baseline and then what is the foundation in the economic growth in the UK, it doesn't look promising, doesn't look great, which means it's a country where we have to keep a watch at what's happening and what's going on in terms of the policy, in terms of the energy, in terms of the inflation. That's a core inflation is basically the biggest risk at this point of time.
So coming to our last question, where does India stand amidst all this? Because advanced economies, many of them are actually in a difficult spot as of now. So how will it be for India, and how will it, especially for the Indian exports? Will that be impacted by all this goings on in the advanced economy?
So one good things about India, there are many things. So two time zone. One is recent and one is basically this decade as a whole. So let me talk about the recent scenario. I think in terms of GDP growth rate, we again got back what we call the fastest growing market in the country, in the world. So that's one good stuff. Some of the industry and some of the sectors have shown some promising growth. And I think thanks to some of the initiatives taken by the government and during the pandemic, the production-linked incentives, that's going to help. The first time, I think Make in India, we have quite some time, but the push actually got during the pandemic, where these global companies who were basically disrupted because of the supply chain, we're looking for a China one, that beyond China as a production hub. And India is one country who can basically capture, and not much traction, but at least if you ask me, there is a significant discussion, upliftment we can see that's happening across countries who basically looking India as a next hub. And in that scenario, Make in India initiatives, production-linked incentives plan, they're certainly going to help. And we anyways, ease of doing business have help Indian authorities to get investment. I think that's happening. Is now only challenge here that how this perception about India can be changed. It's changing very gradually. I think that's one thing. Second thing is that now it's good positive things, good positive wave we can see across various European market and then the US. We need to channelize into the real effective investment in the country. In fact, when I look at my data, the more and more European Union companies are coming in our database to inquire about the Indian companies. So the trend is shifting from the traditional market, US and other developed countries, to the European market. So that trend is shifting, which is great sign that we have. I'm citing this looking at our inquiry data, which company come and inquire in our database, which is good. Now, coming specific to the second point on the export, as a country, since our domestic demand is very vibrant and recovering, and there's no problem at least it's okay at the country level, we are less impacted. But when you take a very specific export, there's two things happening. Good things that we are diversifying from a traditional market to the more and more market, from the product side, from the commodity side, from the country side, which is good things. But as a global growth, it's basically global growth is impacted, is coming down. So our capacity and the capability of exporting to the other market is very limited because there's no demand from the traditional market, especially the Europe and the US, which is going to create a problem at least for 2023 and at least for some quarters of 2024 as well. So that's one concern. The way out is basically how companies can diversify. That's a very short, that's a basically nowadays. Now going for the decade, I think India has taken a good advantage of the Industry 4. Whether talk about AI, ML boom, it's happening multiple places in India. And I think there are multiple studies one can talk about who are basically saying that India is a bright spot in the Industry 4. Industry 3, Industry 2, Industry 1, India was a laggard in terms of adoption, but the Industry 4 is in India is at a different level. So I think that's going to help. In fact, if you talk about Niti Aayog paper, that was addressing that AI can make a difference in India. AI has the potential to boost India's annual GDP rate by 1.3 percentage point by 2035. So that's the Niti Aayog paper talking about. When we talk about the public investment, that's massive, 33% jump from last year. And let me tell you, the infrastructure investment has the maximum multiplier impact through its forward and the backward linkages. So the infrastructure push is certainly going to create a jobs and then GDP push in other areas as well, other sectors as well. So that's one good news. In fact, I was looking at some RBI estimate. The effective capital expenditure, when we talk about through its multiplier effect, can generate additional output of 10.3 lakh crores during 2023-2027. And from a driving sustainability growth, I think RBI estimate that India's green financing requirement is estimated to be around 2.5% of GDP annually till end of this decade, till 2030. And I think our demographic dividend is another piece where we should be happy about it. In fact, share of India's working age population to total working age populations is going to reach 68.9% by 2030. Ideally, we should be the producer for the overall. We are better placed as compared to the rest of the world. Export, certainly a concern, and is not going to revive unless global growth revive or we diversify our market. That's one thing. And the third, I think this decade belongs to India, provided that India plays its game very properly and correctly on a time, whether talk about the technology adoption, whether talk about governance improvement, whether talk about the improving the investment scenario in the country, whether talk about using our demographic in our favor, whether talk about infrastructure financing. These four areas, if the government and the central banks come together and play their game well, I think this decade belongs to India.
Thank you so much, Dr. Singh. That was very optimistic and very nice to hear that this decade will belong to India. I hope the listeners would have enjoyed listening to you as well.
Thank you.